What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, I will give you guys an update on the markets and everything that we need to know about in terms of the stimulus, the cases, the earnings, the different sectors and industries. We will cover everything in this video to prepare for next week. And according to one expert, next week could also be the start of a monstrous rally, so we'll talk about that too in this video. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching as well. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and or technical breakdowns. So first, talking about the stimulus, it's no surprise that we failed to agree on a specific number. The Democrats have insisted that they will not support a bill that does not extend the $600 per week benefit, while the Republicans released a bill that would set the payment at $200 per week through September, and then it would change to 70% wage replacement. Nonetheless, while we still negotiate the actual number, President Trump went ahead and signed a series of executive orders on Saturday expanding the economic relief at a reduced level of $400 per week, in addition to providing payroll tax holiday, deferring student loans through the end of 2020, and extending federal postponement on evictions. Now, in terms of the pandemic, worldwide, we are closing in at 20 million cases, over 5 million in the US alone, with over 700,000 deaths worldwide and over 160,000 in the US. And you can see how we spiked after the reopening, and we are now starting to go down again. And moving forward, it is very critical for the US and the world to contain and manage this in a way that's efficient. We continue to go down in the number of cases while bringing people back to work and creating those jobs again. Now, speaking of jobs, in the month of July, the US added close to 1.8 million jobs, still relatively lower than the month of May and June, when we added close to 2.7 and 4.8 million jobs respectively. But nonetheless, the unemployment number fell down to 10.2%. Now, talking about earnings, even though we've had a lot of S&P 500 and Nasdaq companies already reported their earnings, including some of the tech companies, we still have companies like Marriott Hotels, Lyft, Canopy Growth, and DraftKings that will be reporting their earnings next week that are obviously going to be really important for us to keep a close eye on. Now, talking about the expert Tom Lee, who is the founder of Fundstrat Global Advisors, essentially predicts that next week could be the start of a monstrous bull rally if this trend holds, and he and his team at Fundstrat Global Advisors see the rally beginning on August 14th, with a possibility for the equity markets launching over 30% in just 2 weeks. Now, that's a pretty bold claim if you ask me, especially when we are either at an all-time high or approaching near all-time highs. But the trend that is supporting this thesis is simply the history. When the cases peaked in late April, it took 20 days before the epicenter stocks started their massive 3,000 basis points or 30% outperformance rally in over 10 days. If cases peaked on July 24th, which looks definitive, then the 20th day is going to be August 14th. So if history is any analog, next week is a week we could see a monstrous rally in epicenter stocks. Now, what are epicenter stocks? Lee defines epicenter stocks as stocks that are worst hit by the pandemic and social distancing, which has significantly impacted their businesses. These include a host of companies, including travel, airlines, hotels, apparel, and retail, and these stocks make up about 25% of the total market cap, as opposed to the roughly 75% of the market cap made up by the mega tech-related companies like the FANGs. He also mentions that theoretically, every stock market decline of over 35% saw a symmetric price recovery. In other words, faster the markets fall, faster markets recover, and the ratio is 2.5 times. Given the speed of 2020, this implied making new all-time highs by end of summer in 2020. So now we're going to jump over to my TradingView platform to look at the futures market, where the S&P 500 and the Nasdaq futures opened today at 6 p.m. and where can we potentially see them going next week, and I'll highlight some key support and resistance levels for both of those market indices. Alright guys, so here we are inside my TradingView platform looking at the S&P 500 futures, and before I address the patterns and do a technical analysis on these two market indices, I want to quickly address that yes, Tom Lee has a really aggressive aggressive opinion and analysis on the markets, and he does foresee a 30% monstrous rally in the future. But that being said, there's also other analysts and investors that do see the markets either consolidating or going down. So the point is that no one really knows where the market's going to go, or no one can really predict 100% where the market's going to go. But the only thing that we can do is best prepare ourselves, manage our risk, and expect all possible outcomes in the markets just so we are prepared on what could happen. So that being said, looking at the S&P 500 futures right now as of the time of this video, we're down just about 6 basis points. So if you were to go over to the 1 hour chart to kind of understand where the market opened and how it's trading, you'll notice that we opened right around here. So this right here was the first hour. You can see August 9th at 6 p.m. We sell off all the way down to this level, and now we're starting to curl back up and push higher. So from a S&P 500 future standpoint, the resistance is going to be strong at 33.48 to 33.50, which is where we have gotten rejected on August 7th at 4 p.m. So that was the high for this candle at 33.47, going back even further on August 6th at around 10 p.m. when the futures market hit that 33.47 level and then had a sell-off of over 65 basis points, essentially finding a support right around the 33.20 to 33.23 level. Now looking at the Nasdaq futures, which is down more, close to about 16 basis points, and you'll notice that this right here is where the Nasdaq futures open, and we had a sell-off and we pushed up, getting rejected by the 9 EMA, and we're now starting to consolidate and push down again. So in terms of the support, I do see a strong support for the Nasdaq at around 11,053, which is going to be right around this level where we have previously bounced off of, going back as far as August 6th when we essentially hit that level and then pushed up higher and then started consolidating and had a double top resistance right around 11,268 before having this huge sell-off. So in my opinion, this support should hold overnight. Again, this is no representation on where the markets could potentially open because a lot of things will change overnight. But that being said, if you were to jump over to ticker symbol IXIC, which is going to be the Nasdaq index, and if you go over to the daily chart, you'll kind of understand what the analysis has been over the last few days. We have been trading in between this trend channel for the better half of the last 6 months, and you'll notice that my prediction was essentially the Nasdaq going up another 200 to 300 points from this level, pushing up all the way to 11,100 and then hitting that higher high and then pulling back all the way down to its support. Now I wouldn't be surprised if you don't get up to that higher high at all, and if you just pull back and come down, retest this support at 10,840, where we have previously gone rejected at multiple times, going back as far as July 13th and then more recently on July 22nd. So you can see how we had a double top before pulling back and then finally breaking out of this resistance and making new all-time highs for the Nasdaq. So the next support is going to be at 10,840, and below that is going to be this higher low, or this ascending low, where the Nasdaq has bounced off of multiple times, which sits at 10,600 to 10,650. So looking at the S&P 500, ticker symbol SPX, to kind of understand what exactly is going on with the S&P. So if you were to look at the S&P 500, this right here are going to be some of the levels that we have been following very, very closely, with the resistance sitting strong at around 3350, where we have gotten rejected on August 6th. We hit that level and then pulled back a little bit. So we are struggling to break out of that level. So again, it's going to be really, really interesting for us to see if we are able to break out of this 3350 to 3351 resistance, because you can see that we pushed up all the way up to that level on August 6th, started consolidating sideways, and then got rejected on August 7th, pulling back down to the support when the S&P fell close to 60 basis points down to the 3330 support. And then towards the last 2 hours, we finally made our way back to that resistance at 3350. So there's so much buying going on at that level. So now moving forward, again, the resistance is going to continue to sit at this 3350 level. The support is going to be strong at this 3330 level, which has previously acted as some resistance and as support more recently. Below that, we're looking at 3317 to 3310 level, which is what this green rectangle represents, which is where our near-term bull camp sits. If you were to pull back even further, then the 3280 level, in my opinion, should hold as a really strong support as well, because it has done that very recently, going back as far as August 3rd and August 4th. So I hope you guys enjoyed this video, and if you did, please make sure to drop a like. It really helps out with the channel. It's definitely going to be a really, really interesting and news heavy week. So make sure that you manage that risk, and as always, happy investing, and I will see you guys in the next video.